we put out a call to action, I think about a week and a half ago, MSCI.bitcoincorporations.com. We created a coalition letter that basically speaks to our concerns. We've gathered, over 1,400 signatures, some of the biggest names in the space, including Saylor, including Simon. We did also reach out directly to MSCI, and we did hear back from them and actually ended up jumping on a call with their research team. They made it clear that they haven't made any decisions yet, and that they're taking this, consultation period very seriously, and they're paying attention to the response from the community. They were a little bit surprised, how much noise we've been able to make in just a few days. So yeah, it's interesting to see the impact of these types of actions. It's like you can just do things. You can just launch microsites that have the information to equip people with what they need to know, and people will sign on and join the effort. So yeah, I've been very pleased with this campaign.
Welcome to the Bitcoin for Corporations show. Today, we're joined by George Mekhail from Bitcoin for Corporations and our producer, Spencer. We're going to be discussing a very timely topic, which is the MSCI call for communication, I suppose, that came out recently. George, do you want to start by giving us some background on who MSCI is, kind of what their business is, and why Bitcoin Treasury companies have come up in the course of their business?
Yeah, absolutely. So MSCI stands for Morgan Stanley Capital International, which is kind of ironic because Morgan Stanley, started MSCI, but no longer is really involved. But they still borrow their name, because why wouldn't you use a name like Morgan Stanley? They're basically a global provider of various tools for the investor market, but primarily indexes. So they create several global indexes that are used by investors to benchmark performance for various industries, equities. They report on things like ESG, climate, that kind of thing. And so people can choose sort of what indices to invest in. And so recently, I think it was in October, they put out basically a call for consultation, a proposal that said that they are considering removing or excluding companies whose digital asset holdings represent 50% or more of their total assets from their indexes. And so we're in basically a consultation period between now and December 31st, where they're basically asking the public and investors and stakeholders to weigh in on this proposal. And they're putting it under consideration. January 15th is the date that they are going to make a decision and sort of let everybody know where they landed. They named 39 companies in this proposal that are basically at-risk companies, and 18 of them would be immediately removed from their indexes, and 21 of them would be blocked from future participation. So they're calling them constituents versus non-constituents. So non-constituents basically are like, you're barred from future inclusion because you're kind of on the cusp. So out of these 39 companies, 8 of them are Bitcoin for Corporations members. Mostly, even though it's a global index, a lot of them are concentrated in the U.S. And so, obviously, Strategy, Metaplanet, Capital B, some of the ones that you've heard of were named in this as companies that would be excluded. And so that's kind of the background. I'll pause there and we can get into the details.
On that list was quite a few Bitcoin miners as well, if I recall correctly, which I thought was somewhat surprising because it seems uncontroversial in my mind that they have operations. What's the Steelman case for kind of how to compose an equity index and kind of choosing at the margin what qualifies and what does not? Because they are gatekeepers, but and these indices are used by a lot of investors to drive their passive investment strategies, but they do have to be curated. What's kind of their core argument?
Yeah, it's interesting because this would be a precedent that they've really never never disqualified a company based on their asset makeup. The way that they design these benchmarks is needs to be consistent. It needs to demonstrate the economic realities of the interest that the benchmark is looking at. They look at things like they want to have stability. They want to have really low turnover in and how they compose these the companies that they choose for inclusion. It's kind of like just lumping different companies together in these global indexes. I'm not too familiar with the exact criteria that they typically use, but we just know that what they're proposing is inconsistent with their pre-existing standards, essentially.
And this has really come to the forefront with Bitcoin because it's a commodity, and so it's not affected by other gatekeeping mechanisms like the SEC saying, the Investment Company Act and all of that, but also that it's a monetary asset. And so while we would not expect a banana farm to accumulate a reserve of bananas because they would spoil, all of Bitcoin's properties amount to the fact that it actually does make sense to accumulate Bitcoin on your balance sheet. And then that comes into conflict with their vision for what their indices should be.
Yeah, absolutely. I mean, think of it like this. Figma, company that everyone's heard of, maybe even used their tool, recently announced in their IPO that they hold Bitcoin on their balance sheet. Figma, hugely successful company. Let's say they continue on that trajectory while Bitcoin continues to rise, and because they got in sort of relatively early. Let's say their Bitcoin appreciation and the continued accumulation of it ended up being greater than 50% of the rest of the assets they hold on their balance sheet. That would then exclude Figma from MSCI's indexes. And, in that scenario, no reasonable person would be like, well, that makes sense. You should definitely exclude Figma. They don't have an operating business, because that is just simply not the case. And so the same can be said of REITs, and the same can be said of, other companies that just have significant treasuries. And so that's why this feels like it's kind of out of the blue. It doesn't really demonstrate a clear understanding of what's happening, what these companies are trying to do. To take kind of a generous approach at where this came from or why this is happening, I could see them wanting to sort of mitigate some of the kind of companies that have come on the scene and used, we're adding Bitcoin to our balance sheet as like a marketing gimmick, and then you never hear from them again, and it was just kind of all BS. But this isn't the correct, in my opinion, way to address that concern.
Right. And also fundamentally, the index is, I believe, are market cap weighted. And so even if you have a company come along and engage in some funny business, they would never really get big enough to have an effect on kind of the investor behavior based on index inclusion. So that's where I also feel like these indices, there's a market test for them, right? Beyond just the discretionary test of is it included or not, it's the market test of how big is it? And if it's not that big, then it doesn't really matter if it is included or not. And if it is big, isn't that a sign that the market has made a determination here? Yeah, that's what's bizarre about this. MSCI is itself a publicly traded company. It's a very, very large, very, very profitable company that has a fiduciary obligation to do what's best for their shareholders. And this proposal seems to do the opposite. If you're looking at strategy, if you said we're going to take strategy out of the indexes, and you look at the past performance, well, that's just not a good thing for the people, your constituents, the people that you represent, the investors that take that trust the MSCI name enough to just allocate money to whichever indexes that they've created. And so we're kind of trying to get to the bottom of where this came from, why this is happening, how we can get in front of it. So it's not the kind of thing where it's like we're playing whack-a-mole with these type of conversations. Like if we can really figure out
how to engage and, recognize the fact that this is a new industry. This is a new asset class. We've never done this before. We don't know how exactly to navigate it. So I want to try to not be too emotional about it and rather just be like, okay, this is, what did we expect, right? Like we're coming onto the scene, coming out of nowhere. People are like, what are all these preferred products and what are all these companies coming out of nowhere that are just trying to buy as much Bitcoin as possible? And, how do we make sure that we kind of don't let this be too disruptive, I guess. And I think we need to approach it and say, well, what's the actual problem that we're trying to solve and work, come at it from there.
Yeah, George, and to put a finer point on that, I just want to explore, what has Bitcoin for Corporations been doing to address this? I know you guys have kind of created this call to action for industry members and folks who want to push back against what MSCI is proposing, but could you speak a little bit more about that and how people can get involved?
Definitely, yeah. So Bitcoin for Corporations membership is now up to about 40 members. And so the network has created enough, I think, critical mass to where something like this we can be influential in responding to. So we put out a call to action, I think about a week and a half ago, msci.bitcoinforcorporations.com. We created a coalition letter that basically speaks to our concerns. We've gathered, over 1,400 signatures, some of the biggest names in the space, including Saylor, including Simon, including a lot of the people that are potentially impacted by this. And, it's got a lot of traction. It's got signatures are still rolling in. And it's been really encouraging. It's been good to see the coverage on this. It's been good to see Bitcoiners engage and recognize that this is a big deal in terms of just Bitcoin's going to be fine. I think it's important to no matter what, Bitcoin's not sitting there worried about what indexes the treasury companies are going to be in. But as far as, Bitcoin for Corporations, our mission is to accelerate corporate Bitcoin adoption. This does the opposite. This slows down corporate Bitcoin adoption. And so we've managed to make some noise, which I think has been good. I think this is exactly the type of thing that Bitcoin for Corporations was created for, is for us to be able to advocate on behalf of the industry and on behalf of our constituents. And so it's one of those things where it's like, I'm glad that we are where we are and we're well positioned to take this action. We did also reach out directly to MSCI and let them know that, we have a group of people that are very interested in what they're proposing and have some pretty significant pushback. We put together a pretty thorough technical index that kind of describes everything that's going to take place if this were to go down, potentially. And we did hear back from them and actually ended up jumping on a call with their research team, their head of research. And, that call actually went really well. I walked away pretty encouraged. They made it clear that they haven't made any decisions yet and that they're taking this, consultation period very seriously. And they're paying attention to the response from the community. They were a little bit surprised, how much noise we've been able to make in just a few days. So yeah, it's interesting to see the impact of these types of actions. It's like you can just do things. You can just launch microsites that have the information to equip people with what they need to know, and people will sign on and join the effort. So yeah, I've been very pleased with this campaign.
Yeah, I agree with your view that Bitcoin will be fine regardless. I actually also think these companies will do very well regardless. The people who are really harmed are the users of the indices, who are going to miss out on the growth of what I think will be one of the largest industries in the 21st century.
Yep. Yeah, it is. And MSCI themselves. I don't think it's good to sort of have this be your first impression to a growing constituency and a growing class of investors, right? These are the people that you want to invest in your vehicles. This is how you make money. And so, and on the flip side, I think there's a huge opportunity here for MSCI to be a little bit of a hero and be like, okay, we thought this through and we listened to the logic and we've decided that, there's probably a different way to approach this. then all of a sudden we potentially have a very powerful ally in the capital markets. And now we can start talking about all kinds of other things that, once they start understanding sort of what's happening and the fact that this isn't going away and the fact that you can't just exclude, carte blanche, a group of companies that are going to be some of the largest companies in the world, like Strategy, then things get really interesting. And so that's kind of the approach that we're taking. We're trying to see this as like a opportunity to develop a relationship with a key market player that's not antiquated with us, and put our best foot forward. It kind of reminds me of the work that we did at Bitcoin Magazine during the election to get out the vote and to make the issues known, let people decide for themselves, just lay out the facts and see what the market really wants to do. So I don't want to say I'm excited about this. It's a weird thing to be excited about because it's not good, but I'm excited about, our ability to mobilize. I'm excited anytime I see the community united and people kind of passionate about like, hey, why are you, we're not bothering you. We're over here kind of just doing our thing. Like, why are you suddenly messing with our industry? And so I like that we don't kind of take things lying down, and that part of it I am excited about.
Yeah, it does remind me of how things happened here in Texas with regards to Bitcoin, where at first it was the legislature coming out and trying to curtail or stop Bitcoin mining from happening here. And then that kicked off lots of relationship building, lots of education. And then on the other side of that, the legislature, not only did they not pass that bill, but they also passed a bill to create a strategic Bitcoin reserve. So they went a complete 180.
There you go. Yeah, that's exactly the type of opportunity I'm talking about. So I think that's available to us. I think, it's the timing and the urgency that this was put out is, unfortunate because we're heading into the Christmas holiday and the end of the year and everyone's kind of checked out. But like, I think it's critical that we keep the pressure on and that we continue to convey like we're not going anywhere. We are a large group of investors that you don't really want to get on the wrong side of arbitrarily. Like it's just kind of a weird position to take. So yeah, we'll see how things play out. But I think the next 10 days before this deadline are critical.
I could see them eventually coming out with new indices that might not include digital asset treasuries, or might only include the Bitcoin ones, or might actually just be for digital asset treasuries, right? That they could actually become a leader in indices for this nascent industry. But it's going to take education and relationships to develop that.
Absolutely, and in our appendix, that's one of the things that we propose in terms of just like alternative approaches, things that they could do differently. We outline enhanced disclosure, separate classification, like you said. So if you're concerned that a company that has 50%, just make that a disclosure on the index and let the market decide if that's something that they're concerned about. But just wholesale excluding them is definitely going too far in a very arbitrary way. So, and then the separate classification thing, like we could just see a whole new set of indexes creating a subsector without having to include them from consideration.
And do they ground that? And this is, I think, pretty widespread and a longstanding debate about Bitcoin as an investment is its productivity, its utility, right? Where they might look at a REIT and say, okay, well, these are houses, these are factories, these are office buildings that people are using and paying rent in. And so we can wrap our heads around that. But if it's just a dormant, pet rock that you're just going to sit on like Bitcoin, then that makes it very different. And in the mining context, it was that you're wasting electricity for Beanie Babies. In this context, it's about wasting capital on this new phenomenon. And so do you think that there's that bias, or is it something else?
Yeah, this is one of the things that we talked about with them in great length. And so a couple things. One, our argument that we kept coming back to and hammering home is that these are operating companies in the eyes of the law. These are C corps, and the SEC recognizes them as operating companies. Every regulator is looking at them and saying these are operating companies. And so it's really bizarre for an index provider to come in and say, oh, wait, you're not operating companies. That's not their role. That's never been their role. It definitely represents some significant scope creep in terms of what they're supposed to be doing and in the market. And so we kept coming back to, it really doesn't matter how you feel. Like, this doesn't feel like an operating company. That's what it seems like is kind of the argument. You really break it down. It's like, well, they're just buying Bitcoin. Forget about the fact that legally they're an operating company. Forget about the fact that MicroStrategy has thousands of employees dedicated to their software business intelligence operating business. Forget about the fact that MetaPlanet has a hotel. You just don't feel like they're operating companies, and so because they're doing all this Bitcoin stuff, and that's just not a logical position to take. It just doesn't make any sense. And to your point too, you can't. If anyone has ever done any mining at any level, you know how much operating goes into that, and so it is weird to see a bunch of mining companies on there as well. And so, I just think that's the crux of this, and every other kind of argument to try to come at this and justify why it's reasonable falls flat when you just come back to the fact that no, like, these legally, in the spirit of the law and the letter of the law, are operating companies.
Do you think that Strategy got on their radar, on MSCI's radar, because of the conversation around the S&P 500 inclusion earlier this year, or is it just completely unrelated?
Yeah, so actually they did share with us how this issue even got on their radar, and surprisingly, it wasn't Strategy. They mentioned that MetaPlanet was the one that they were originally looking at, and it was MetaPlanet's September offering that they put out that sort of accelerated their desire to put this proposal out. So something about these companies issuing preferreds seems to be what's more bothering them, and so I thought that was interesting insight that it was actually MetaPlanet and not Strategy that got on the radar.
That is interesting, because when I think about their capital structure, and let's put aside the hotel and the software business and just kind of look at the Bitcoin Treasury segment of the business, if they were just offering common stock and buying Bitcoin, that, to me, again, using that word, feels more like an ETF, right? Closer to that. But once they start offering preferreds, then it feels like they're far more into the treasury operations and capital management and financial services segment than something passive, because they're making active calls on, what do we do? Do we make STRK or STRD or STRF or STRC, right? There's all sorts of different ways of developing these products that are clearly the result of financial operations.
Yeah, that's exactly the point. And you're also creating products for the market that consumers engage with and interact with. And so it's like, I don't know. That part of it, to me, does make it feel a little bit like there's some folks in high places that are potentially wanting to slow down Treasury, or Strategy and some of these Treasury companies, because if the trigger was basically MetaPlanet operating sort of like a bank, right? And we've heard Saylor talk about how part of his aspiration is to become a better bank, and creating preferreds is certainly one of the steps to get there. Creating digital credit is the steps to get there. And so if that was the trigger, it tells me that there's people at MSCI or people influencing MSCI that are concerned about that specific trajectory, because you're right, it's even more illogical to say once you start doing that, then you're less of an operating company. If anything, it makes you more of an operating company.
Is there, do you think, bottom up pressure from asset managers to index providers telling them, hey, our mandate does not include crypto. We don't want any crypto in our portfolios. And so we can't use your index if it has these digital asset treasuries in them?
It could be. It's not something we talked about to them about. It's hard to really pinpoint where the pressure is coming from. I think that would be, a little bit surprising. I would hope that we're a little bit further along than that if asset managers are still kind of taking that position. Maybe to your point, it's like they have no choice. They have no ability to invest in a fund or an index that has DATs in it, and so they could be like telling them. But like, dude, MSCI, how many indexes do they have? Hundreds, thousands? Like, it's not like there's a shortage of other ones to choose from if that's really the problem. So I would find that really hard to believe. If I were to guess, I would guess that number one, it's just a lack of education and understanding kind of what's going on, and or number two, there's top down pressure from bankers essentially to try to slow down the trajectory of strategy, because strategy's coming to eat their lunch, man. Like Stretch is a 10.5% product compared to the banks like 2%. They don't want to compete with that. And so if you just look at incentives and you just look at game theory, that to me is what makes the most sense. But I'm obviously speculating, so I don't know exactly the why or kind of the motivation. And I hope that I'm wrong, and I hope that we prevail. I think this is a winnable fight. I think that we can either get them to pause or slow down the decision. I think that's one very possible outcome, is they come out on January 15th and decide they're going to punt and say, hey, we need 6 more months to look at this, and it's just one of those things that we fight again in 6 months. If I was putting money on it, and by the way, you can put money on this. There's a polymarket line for this, so feel free. What can't you bet on these days anymore? This is a more interesting question. But all that to say, the possible outcomes would be, they're going to implement this rule starting January 15th, and these 18 companies are going to be delisted immediately. If that happens, I mean, that's kind of like worst case scenario. If that happens, there's people who say that, this is already priced in. We know what phrases like that mean when it comes to trying to predict what happens next. Like, I think maybe part of this is priced in, but I think if the hammer really came down, the market would respond negatively. Not only that, when it was actually implemented, the passive flows that strategy is receiving they would no longer receive would also be an impact to the market. And that's really what people need to understand, is like that's a twofold thing. There's market sort of sell the news or whatever market responds to emotionally, and then there's the actual practical reality of just less money going into these companies, and the impact of that. So the other outcome is we did a good job convincing them, and they come out and they say, we're going to withdraw this proposal entirely. That would be incredible. And that would represent, a brand new relationship that we could further engage with. The third route, the one that I think is most likely, is that they're going to come out and say, we need more time, and we're going to punt on this.
And is it, do you think that it's harder for Bitcoin treasury companies because there have been copycats with other digital assets that might arguably, from our perspective, be of lower quality, and thus now we're back into, putting our active management hat on and saying, actually, this should only apply to non-Bitcoin cryptocurrencies?
Yeah, I mean, I think they're not making that argument. They're not making that distinction. And again, it just goes back to the education piece. Like, they just really don't know or don't consider the differences between Bitcoin and other digital assets. And so strategically, it's probably not the best line of debates to take. I think that, again, it's similar to the election cycle. It's, we have, as Bitcoiners, more in common when it comes to sort of what we want to achieve in DC with crypto people than not. And I think this is also one of those scenarios, is like, they're not making the argument of security versus commodity or whatever. And so we don't have to break ranks with the broader crypto community. It doesn't make sense. Doesn't help us. We're on the same team when it comes to this. And so if we want to win, like that's how we have to think about things. We can't get again emotional and be like, oh, you're a shitcoiner. I don't want to be in the same, campaign as you. Like that's just dumb. That's just it's not strategic. It's not effective. That's one of my pet peeves sometimes about our community is we tend to just like shoot ourselves in the foot. And it's like, do we want to win? Like, do we actually want to win? Do we want to see Bitcoin become the global reserve asset? Or do we want to just like sit here and whine about what other adults are doing with their money? Like, that's really the question you got to ask yourself. And so like, I personally want to win. And so I'm going to take the most logical approach. I'm going to take the most grounded approach to this conversation. I'm going to keep coming back to like, you can't look at an operating company that's legally an operating company and say that, look, that's not an operating company. It's just like, that doesn't work. It doesn't make sense. It's not replicable. It's not anything that has a precedent that we've ever seen. And so like, why would we start now? And I haven't received a good answer to that. And so that's where we're going to continue to hammer.
And I've been surprised that we didn't see a tweet from Elizabeth Warren endorsing MSCI's path here. Maybe it's just completely off her radar, or she's learned that it's not constructive for her to weigh in because she's such a polarizing figure. But that's where, I think that there in the future, let's say in a future administration, we could potentially see legislation that is along the same lines of saying you can't hold more than 50% of your balance sheet in cryptocurrencies. And so this is a template for future political legislation or regulatory action in a hostile, future administration. That if we can push back kind of in the private sector and show that it's not a path that anybody wants, then it also will help on the political side.
Yeah, it's interesting. I don't think any engagement from DC on either side about this. I know that there are efforts behind the scenes to get politicians to engage and weigh in. But nothing has happened yet. So yeah, I think it is one of those things. We're heading into a midterm election year. Politicians are weighing like how much political capital is this going to cost me, and what side of this do I want to be on? And so they may just be doing the calculus and kind of waiting to see which way the wind blows on this. But yeah, I mean, Elizabeth Warren, I don't think they probably told her not to tweet about it. Like we don't different teams or whatever. So yeah, I think that the precedent that this could set is very dangerous. It gives S&P 500 something to look at and be like, oh, well, if MSCI is doing it, why don't we do it? It gives the government something to look at and say this is now a reasonable thing that there is precedent for. And so that part of it is very dangerous. It's not just the implications of the MSCI inclusion; it's the downstream implications of what this means if this becomes a precedent.
And then is this the movement of Bitcoin Treasury companies? If it's going to continue to grow, if we're right about this, do you think that there's a point where if the S&P 500 is 493 Treasury companies and the Magnificent Seven, at some point is there an issue here about capital allocation on a macroeconomic perspective, or does it just reflect the reality on the ground?
Yeah, I mean, again, if you just zoom out and you just consider what Michael Saylor has done, just to use him as the key example. Michael Saylor looked at his balance sheet of $500 million and said, that is an ice cube that's melting. I need to do something about this. And he discovered Bitcoin and, realized, oh, this is a better place to park my capital. That has worked out for him, so, pretty well. 660,000 Bitcoin now on the balance sheet because of that one realization. And he's done this while continuing to operate a successful software business. that, by the way, had $500 million on its balance sheet before it ever touched Bitcoin. So they're probably doing something right. In his eyes, it wasn't good enough. It was like, we're not keeping up with inflation, even though we are a profitable and successful software company. And so this proposal, similar to the Figma one I mentioned, like it penalizes Saylor for saving money. And that's just a really bizarre thing to do. Is, if we talk about incentives, you're going to disincentivize companies from making smart financial decisions that have have real world examples of them working out. And you're saying, no, don't do that, because if you do that, then we're going to exclude you. And so, I think that's the implications around that to me are like the most jarring. It's like, we want to encourage this type of behavior. And not just as Bitcoiners, but just like in general, we want to encourage companies to be fiscally responsible. And if you look at Saylor, that's a good example of a company that's been fiscally responsible and how well it's worked out for them. And so I think we want to see more examples of that, not less.
Yeah, no, it's an argument I've seen people make about essentially the companies like Strategy, if they've got $500 million on the balance sheet, that they should always just give that back to the shareholders, right? They should always just try to constantly, as Saylor would put it, decapitalize the company, right? Extract all the money, give it to the shareholders. And, I was thinking about this with the context of how much investment is going into AI and adapting to this new technology. And the bottom line is that a lot of these AI companies are having to borrow billions and hundreds of billions of dollars because they don't have the cash, because they didn't have the money. They were among the biggest cash savers over the past 20 years, and they still don't have enough of the money. And so in my mind, this premise that companies should always give cash back to their shareholders kind of just denies this fact that there's going to be investment opportunities in the future. And so you need to be saving up in the present for that, and not being penalized, whether through inflation or from decisions from indices.
No, absolutely. And look, I think the days of you invest in a company because you are really interested in the dividend that they're going to provide, and I hate to be like sort of classic Bitcoiner here, but like those are dead, and fiat killed them. And it's just not reasonable or realistic to think that that's what the deal is. Like, so the idea that Strategy or any company should just give back the money that they earned to shareholders when that's not sort of something that they've set up at the onset, right? Like we have this X dividend or whatever, to me is crazy. And it only works if there's an underlying sort of social contract that the money is not going to depreciate, because the $500 million looks cool in a bank account, but what Saylor realized is it's like it's not going to increase in it's not even going to hold its value. So if it's not holding its value, like it's very, very difficult for a company to keep up with inflation, let alone give dividends back to their shareholders in a lucrative way, and in a way that made more sense and happened more frequently when we were on a gold standard, and the money wasn't being constantly degraded. So I just think those days are over, and I just think people got to look at this realistically.
And also, having more than 50% of your balance sheet in Bitcoin increases the confidence that all of the stakeholders have in the continued existence of the company. Right? That if you're signing a 10-year contract with a company, you want to know that they're going to be the counterparty for the next 10 years. And having capital on the balance sheet gives you that comfort. Same thing for an employee, right? That is going to be paid in equity, or they want to know that this company is built to last. And holding Bitcoin on the balance sheet, I think that for people who are not familiar with Bitcoin, they might see it as like a flash in the pan, because it's only been around for 16 years. But for those who understand the software engineering that is built to it's going to last well past our lifetimes, it's a whole completely different way of looking at having that much Bitcoin on the balance sheet.
Yeah. Yeah, it's just a different world, and it's hard to know kind of where things are headed and how we're going to look at things differently. But you're absolutely right. I mean, anything that strategy puts out now, the level of consumer confidence that you can have if you understand what Bitcoin is, they have 600,000 Bitcoin on the balance sheet. Like, I believe that they will be able to pay the stretch dividend, forever, because of that backstop. And even if you don't understand what Bitcoin is, you just look at the value of the Bitcoin and just do math. It's like, oh, I can have a lot of confidence in this company because they're committed to, holding this asset. And it kind of creates this dynamic of, being backed by something, which, is so foreign to us because most of us didn't get to experience life before 1971. And it's just, we forget how different, like, the entire way of life is, the entire way of viewing everything and value and your time and your labor. And why is this hamburger getting more expensive in 5 years wasn't a normal thing. Like, it was just, that's a new phenomenon that we've only been really living in. Well, it's new, but it's old. But it's new for us right now. And so I think what strategy has created and what these Bitcoin treasury companies, I think, aspire to is that type of a reality where you have stability in whatever it is that company is putting out. So that's why these preferreds are interesting. That's why they're leaning in so hard on them. And it was funny when they put out the $1.4 billion, I think, cash backstop or whatever. To me, that just felt like, they're like, okay, fine. The 600,000 Bitcoin isn't good enough for sort of TradFi analysts. Here's a $1.4 billion fund. Is that better? Yeah, I think it's just interesting to see how all of this is playing out. And, it's fun. What a time to be alive. We get to experience this in real time.
Eventually, we'll see the inverse happen, where MSCI will look at a business and say, wait a minute, there's only an operating business here. You don't have any treasury reserves at all. 0% of your balance sheet is in Bitcoin. How is that sustainable?
Yeah, exactly. No, I mean, I think that's true. I think everyone is going to become a Bitcoin treasury company, whatever we want to call them. I know that name is kind of controversial these days. People are trying to rebrand it, run away from the name. Good luck. It's like changing sats to bits or whatever. It's probably not going to happen.
Yeah, I think just a better way of saying it is every company will become more efficient with their capital over time. Where that converges, I think we have a certain outlook. So I think we'll leave it to the market, but they'll figure it out.
I like that better. We'll go with that.
And George, I guess, we've addressed a lot of what's going on with MSCI here and told folks how they can get involved. But I kind of want to give you an opportunity here to talk a little bit more about Bitcoin for corporations and what you guys have accomplished over the last year, and what you look forward to going into 2026. I mean, I think you guys have seen massive member growth, had some milestones, some symposiums, but what has this last year been like? And maybe give us a temperature check on kind of where is this Bitcoin for corporations narrative and investing environment headed after what has transpired recently.
No, absolutely. Thanks for the opportunity to share. I think it's been a very exciting 16 months or so since we launched Bitcoin for Corporations. 2025 being our first full year in operation. Incredible growth, incredible interest, product market fit almost immediately. There's definitely demand for the work that we're doing and this network that we're building. And I think MSCI, again, is like the perfect example of the type of action that we are well positioned, well equipped to take on and be effective in addressing. It's kind of one of those things where it's like, if there wasn't a group like Bitcoin for Corporations, I know there's been a lot of engagement with this topic. There's been several other letters. I mean, Strategy put out their own letter, Strive put out their own letter. I saw Bill Miller engage with this, put out his own letter, and that's all great. But what we've been able to do, because where we're positioned in the market, is bring everyone together. Including Saylor, including Matt Cole from Strive, including Eric Semler, and say, hey, let's have a unified front. Let's all kind of align on these talking points and that I think is a strong way to address these topics. And so that's part of what we're going to double down on in 2026. It being a midterm election year in the U.S., I want to see us focusing on advocacy type actions more and engaging with the both political and other policy type things like this that impact our members, because there's going to be more of them. This isn't going to stop as Bitcoin goes mainstream. It is going to be like whack-a-mole. It's like, oh, who else is fighting us? What you guys want to talk? And so that's a big part of what I want to focus on. Practically, we're coming off of our fourth symposium of the year in Abu Dhabi. Prior to that, a few weeks prior to that, we were in Amsterdam. We did a symposium, did another one in Hong Kong, and did one in Vegas. 2026, we're hoping to do 6 symposiums, including one in DC, to again just kind of focus on the advocacy side of this, get some politicians in the room with our members talking about the bills and the issues that affect them, because I think we have I think we have the ears of a lot of politicians, especially based on what we were able to accomplish in the presidential election. I think they see us as a force and an important sort of constituency, important voting bloc that they have to deal with one way or the other. So it's been exciting. And, we signed a 5-year extension with Strategy earlier this year. And so they're committed to this mission. They're obviously our founding partner. And so that gives us at least 5 years to continue to envision what this product is, what this network is. How can we double down on things that are working? What are some things that maybe we started doing that are less effective that we can pull back on? So it's a good time to reflect and really look at the entire ecosystem and see how we can be more effective. One of the things that's on the roadmap is to create a way for private companies to also engage. Our network right now is made up of public companies exclusively, but the demand and the inbound requests from private companies to say, hey, we need something like this. Hey, can we sign up? And us being like, this product, this is really has been designed around public companies. And so it's not going to be as effective, but we want to look at creating something that's also going to address the market demand for private companies to have something like this. And so yeah, I'm excited for 2026. It's going to be another great year. We'll see what the market does. I think that's the big question everyone's asking. But regardless, we're going to be here building. And so I'm looking forward to it.
Amazing. Yeah. And I guess, Pierre, I also want to include you in this conversation a little bit. I think George led us into a nice segue there. I know you're with your work at Strive, you're very clued into, how the market has been treating Bitcoin treasury companies, firms issuing preferreds such as Strive, as well as Strategy and others, Metaplanet as well. But, what has the main takeaway been for you over this last year in terms of how to effectively operate in public markets with Bitcoin at the core?
Yeah, well, I think on the Bitcoin side, for one, the halving cycles are over. And so now we're in a completely different regime, for better or for worse. I think for much better, actually, because I think that we're going to... now the Bitcoin price really reflects demand, right? Not just supply shocks. And so I think that demand will continue to steadily increase. And so we won't have kind of the booms and busts that we saw with Bitcoin, over the past 3 cycles. On the treasury company side, I think that we're starting to see kind of what is the relationship between a Bitcoin treasury company's stock market performance and Bitcoin's performance. And I think that there was a view that Bitcoin treasury companies were essentially just like a 2x levered ETF, right? That they would march in lockstep with Bitcoin. But I think that view has been disproven, and that really it's a much less correlated relationship than one would assume at first, which actually I think is very relevant to the MSCI index conversation, which is that these are not just Bitcoin ETFs, right? That because they are actively operated companies, their multiples are going to expand and compress in ways that are not directly related to the Bitcoin price. And so that, I think, was the big learning this year. And then, of course, the shift from using convertible bonds to using perpetual preferreds. And so I think that that's kind of the third big change this year that, caused perhaps some crisis of confidence among some investors who felt like that's not what they signed up for. But for other investors, I think created a huge opportunity to see that, hey, this is actually going to be an even better operating model for Bitcoin treasury companies, much more sustainable with less refinancing risk over the long term. And, it goes back to that zoom out mentality of, are you building a company for one cycle, or are you building it really for multiple cycles and for any kind of market conditions?
Yeah, and on that final note, I think this past year has really brought the question to my mind of, in this early stage of Bitcoin's broader market deployment, what does the market want to see in terms of how companies are accumulating Bitcoin and keeping Bitcoin on their balance sheets? I think there's kind of been, what jumps to mind is the comparison between like companies that have strong cash flowing businesses, whereas companies, say Metaplanet as an example, they do have a hotel on their balance sheet, I believe maybe one or two, but at the end of the day, it's their capital market activities that are really driving this Bitcoin balance sheet accretion. And so I open this up to both of you guys. Like, how has that narrative? Have you considered that this year? And do you think we'll see changes one way or the other heading into 2026?
I don't think it has resolved yet. The debate, especially for the new companies that only launched this year, right? But over the coming decade, I think that we will see a resolution to that debate in one direction or the other. I think in the direction of, hey, this is really about holding Bitcoin on your balance sheet and then managing the capital structure around it, rather than trying to develop kind of Bitcoin cash flowing businesses. That's my personal bias, but I think that this trend is going to be so powerful that companies will succeed even if they don't fit into my model exactly.
Yeah, I mean, I agree. I think it hasn't resolved. I do think there has obviously been a shift in the market that, the days of just making a press release about using the word Bitcoin is going to pump your stock, and that's the expectation. And then I think those days are probably over. But, to Pierre's point, I think that if a company is committed to the strategy, and if there is a level of conviction on the board and the leadership that this is what we're doing, and really there's no turning back, and their execution is sound, and they don't over leverage themselves, then really these pullbacks, just like for the average Bitcoiner, we love the dips, right? Like, these pullbacks are great. We want to accumulate more Bitcoin. These are buying opportunities. And so I don't think, and I've heard this directly from several people who are in the positions that would know. They're not stressed about this. They're like, this is what we signed up for, and so we're ready for it, and we're going to keep executing. Obviously, everyone wants the price to go up. Obviously, it's easier to operate in a up market, but I don't think the companies that have done this right and have the right motivations and have strong convictions, I don't think this is going to slow them down. If anything, I think this is going to get them more excited about accumulating more Bitcoin.
Yeah, and I also think that the dips are, as you said, good for building conviction and strengthening that conviction, and we're finally giving that opportunity to the IBIT class of 2024. So hats off to them for earning their stripes as Bitcoin investors for perhaps the first time. So I think ultimately that bears so much fruit in terms of how much they understand the asset, and then understand its relative pricing to where I think many would value Bitcoin as this pristine collateral, global neutral reserve currency contender, still so early in the cycle. So, I think the suit coiners, in my estimation, will continue to have, a positive impact on the space in 2026 and beyond. And that's what I'm really looking forward to, is we kind of saw that with, this class of strategy investors. I think, the MSTR True North guys come to mind as kind of one of the metas of this Bitcoin cycle. And I think we'll just continue to see that just further and further up and down the capital stack, across TradFi. So personally, I'm very bullish on that heading into 2026.
Yep. Bullish on suit coiners, man. How can you not be?
The narrative will continue to oscillate that when things are going well, then we'll be claiming victory. And then when things are going poorly, the critics will come out of the woodworks and say, hey, look, we told you so. This is a Ponzi or whatever. And so I think that, the price will drive sentiment quite a lot.
Yeah. And meanwhile, strategy stacking 10,000 a week in this environment and announcing $1.4 billion backstop. So, sounds like an operating company to me, I guess. I don't know.
Yeah. I guess, do either of y'all have an outlook for 2026 in terms of just Bitcoin purely from a price perspective? I know Bitcoiners love their price predictions, but I mean, maybe you just have commentary on like what has driven this recent sell-off. I think many people are looking around whispering about OG whales liquidating, other people saying, large a market maker or exchange of some kind is facing stress. But, to those in the audience that are curious, like, do you guys have any insight on this or where we expect Bitcoin may go in 2026? Not the easiest question to answer. Many have eaten their slice.
It is actually easy,
but okay,
it's easy. It's easy to throw out a number. It doesn't mean it doesn't mean anything. I'm the worst price predictor, so you don't want to listen to me. But I'm kind of a perma-bull, and I'm always wrong. Except when I'm not wrong. Those few times, like, see, I told you it went up, just like I've been saying every day, even when it went down. 250 is what I was hoping for this year. So I'm hoping for it next year. But I think that the positive signs are, even in these large sell-offs, the market's absorbing it, relatively well. There's been some strange kind of what looks to me like market manipulation. Like the price activity recently has been weird. I don't know if you guys have experienced that. Like the way Bitcoin is moving just feels like not how it typically moves. But at the end of the day, I don't think that the price levels right now are sustainable based on the institutional buying activity. Like institutions are buying way more Bitcoin than is even being mined quarter after quarter. They did in 2025 at an increased clip. So even if you were to chart sentiment over the level of buying that's happening, the level of buying increases. It would diverge from that sentiment chart. And so you got to look at the signal and kind of stay off of Twitter sometimes if you're getting too emotional about it, because the fundamentals are still there. Bitcoin hasn't changed. Nothing. If anything, it's much easier today to make a case for why Bitcoin is going to do what we've been saying it's going to do for years, because of it going mainstream. And so I am more bullish than I've ever been, and I think that market sentiment is wrong. I mean, you can't look at the market and say it's wrong. The market is always right at some level, but I do think that Bitcoin is mispriced.
Yeah, I agree with George. And I think that part of the mispricing is from just the amount of capital going into AI, that it has taken the oxygen out of the room. And that cycle will, eventually reach its top, and then they will overbuild. They'll build too many AI data centers, and then we'll see whether they get a bailout or not. They were already talking about that this year. So I think that's number one. Number two, on the demand side, I also think that there's a lag between the ETFs being approved by the SEC last year to kind of the first wave of allocations, which we heard a lot of people, actually, it was Bitcoiners who took their Bitcoin out of cold storage and put it into the ETF. And so it's kind of just a lateral move. We can debate the philosophy of that. But in any case, then as these large brokerage platforms and wealth advisors go from allowing clients to buy the ETF to recommending it, that's going to be another phase shift. And then there's all the little structural changes that happened due to the Trump administration, like the repeal of SOB 121. We've also seen the approval by the CFTC for spot Bitcoin trading at CFTC venues. Using Bitcoin as collateral for futures trading is huge. And then increasing how much options can be on IBIT, for example. So all of these little tweaks at the edge, I think they take years to show up in the Bitcoin price. And that's why I think that, in terms of price target for next year, I'll be happy if we're at like 130 or 140 at the end of the year. Because I think that there's just a lot of building that needs to happen and to kind of create a floor for the price here and to get it through people's heads that the 4-year cycles are over. And so if you're trying to use the past to predict the future, that's going to be a problem. You can't do that anymore. And that you're going to have to build your conviction on something else, which I think is, the fundamentals.
Yeah, absolutely. And I think 130K Bitcoin next year. I like cheap Bitcoin. 130K still sounds cheap to me. So I like that directionally. 250K as well. It's a bargain in my eyes. But George, do you have any parting thoughts for us for Bitcoin for Corporations members or any of the folks who've just been supporting you all over the last year as we close out here?
Yeah, definitely want to say thank you. I mean, thank you to you guys. One of the highlights of this year was launching this show, and I think it's been a huge success. So excited to continue it into the next year. Thanks for having me on. This is my first time on the show. Hopefully, we can do it again. Final thoughts would be get engaged. I've talked about some of my pet peeves. One of my pet peeves is when Bitcoiners say that Bitcoin is inevitable, and that there's really nothing that we need to do. Bitcoin's already won. I get it. I understand kind of what they're trying to say with that, but I think that that mindset and that mentality sets us up to be very passive and just be like, oh, we don't need to worry about MSCI. We don't need to worry about this. And I think again, I want to win, and I want Bitcoiners to want to win, and so my encouragement is to engage and to really understand what's happening and understand the ways in which there are impediments to our success, and how you can make a difference. Every one of these signatures does matter. They are paying attention, and this is a very, very winnable fight. And so, my encouragement would be to find ways that you can engage, even if it's as simple as taking 20 seconds to sign our letter.
I agree with George, and I'd also emphasize that. MSTR, it was built during the bear market. And so for those corporations that are just now starting to get interested in this phenomenon, this is the best time to get interested in it. And that it wasn't so long ago, 3 years ago, that MSTR's MNAV was below 1x, right? So I think that if you want to build, you have to be consistent, and you can't just build when it's a bull market. You have to actually, to George's point, stay engaged, whether it's on the business side or on the public policy side, so that when the bull market comes back, you'll be well positioned to reap the rewards of that building.
Love it. Well, gentlemen, thank you for your time. And I guess I'll just do a final shout for this MSCI response, and for folks to add their signature if they want to go to msci.bitcoinforcorporations.com, join the more than 1,400 people that have already added theirs and made their voices heard. George, kudos to you and your team, boots on the ground, knocking on doors and getting the word out. I think it's been really, really effective, and look forward to seeing seeing MSCI bend the knee if they want to follow in Vanguard's footsteps. Maybe not the worst idea. I'll just give them an easy way out on this one.
There you go. Thank you. Thanks for having me.
Of course.
Thank you.
Alrighty. Thanks, guys.
See you guys.